Good afternoon, traders. Hope we're doing well today. Another cracking night in the US overnight, making new highs. Uh, Europe markets, they followed along suits only mildly, not as much as the US did quite well. So they're just kicking along nicely at the moment. Just continuing along in that Christmas rally by the looks of things. So we'll have to watch where they're headed. Now that probably can lead us into what we're talking about today, sorry. A market's headed for a crash. Will the bears be out in 2017? Well, they come out of hibernation. Market's been very, very strong, as we know. So we'll discuss what the opposite effect could be. I think Paul really just yesterday, just the comments yesterday, sort of triggered. Okay, we'll have a look at it. Let's just look at what could trigger it. And I found a good little news article on Bloomberg, which I'll put up into the link later on. Just remind me to put that up there. But have a look through. It's quite interesting, and there's a couple other comments that we put on the market wrap for TradeSetup. Earlier, well, not earlier, this morning, about 8:30 this morning, we sent that out each morning, and that's had a little piece on there I think is quite interesting. So we'll have a chat about that. First and foremost, what we've got in front of you on the screen is the TradeSetup live stream and the general advice warning. Just take a look at that each day. If you've got any questions, just feel free to send it through to TradeSetup at support@tradesetup.com.au. Now, also, if you can, and if you're enjoying what we're doing, if you could just follow us on Twitter and Facebook, and jump onto YouTube too. Subscribe to us on YouTube. So that'd be great. Anyway, let's get into it. Let's take a look at the markets from overnight and see where the ASX is trading at the moment. Did open up a bit stronger, so that's just click over here. So the market will be up about 43 at the moment. So we're ticking along nicely, really. Really kicked up quite strong. So maybe the discussion that we're going to have has got no basis, but we'll see how we go. Just get up the XJO. So we are, what are we now? 55. So we're 10 points shy of 5,600, or sort of that resistance zone there. So we could be teetering on resistance just at the moment as we speak. But we'll take a look at that in a minute. We'll go over this more in discussions today. What will, just 1 minute, how shall I attack this? All right, so we've got the markets up 44, 45 points, about 10 shy of 5,600. You can see a lot of these markets doing quite well. We've got GXY, Galaxy Resources is one that's doing quite well for us. We've got it down here around 37.5. Kicked on nicely. I actually expect to back off a bit here. They've had a good news announcement today, which opened it up, and it's up about 11% at the moment, we can see. Kicked along nicely, so we've taken a partial at 46.5, which is a bit of a shame in hindsight, but we've got a second half on still, and we're going to see if that can run up into new highs. It is looking a bit extended at the moment, but there's nothing to say. You never just look at a market to be extended and sell out. Always wait for the market to tell you what it's doing, in my view anyway. But that's up at 51. That's quite strong, and actually it's very strong. You can see that move up there the last couple of weeks has been solid. It's come from sort of oversold conditions to see it contracting lower, built a base, and that's just prime type of price action. You can see that sort of it's pushed down. It's held some higher lows, held 30, retested it, popped back up, pulled back, made that higher low, which is the entry, a beautiful little entry, and it's just taken off since then. So we'll keep following that along. We've got Elders doing bugger all, to be honest. Want to see that kick up through $4. We got in, entry was around $4 way back here. It's done next to nothing. It has been oversold. It sort of held up, built another high low, and this price action looks like, if you can just drill down to that, looks like it could take us up and through, but we've just seen a few tails there on those candles, which doesn't mean a lot. It's more the price action we want to focus on. And if we can kick up through 4, I think we'll be attacking 410 and above, but we'll see how that plays out. I'm just trying to think of something else we've got here. SLR, yeah, we've got that from 56 thereabout, 56 I think. So we're up on that one, but that, in essence, we could just be contracting still on that daily basis, but it's a weekly that's really enticing. If you go and look at that one, anyone got that, by the way? Anyone have a look at this SLR? So that weekly chart looks really nice. We've come off this 15, so 20 zone, pushed higher, built some higher lows, had a bit of a move higher, and then we're just contracting now, but we're still holding higher lows. So if we can get up through say 61, 62, that's or 63 zone, this little high here, I think it's going to take out 70 and just keep pushing high into new highs, but we'll see just where we could be heading to. Probably up to about $1, I'd say, but we'll see how that goes. Let's take a look at the actual ASX intraday market for now. You can see that it's that little support line there. The market's open, just washed out a few overnight trading, and maybe brought them into the market, a few shorts, taken them out, got overextended to the downside, but still technically it's holding a nice little high low there. We can see, so that still looks quite strong. There's nothing wrong with that price action. It all looks good. Pushed up into, like, we've been following this for quite a while now, up to 5,600. So what'll be interesting now, and we won't talk about just now, we'll talk about it in just a second, just look at the breakdown the market a bit better from a bear's perspective, I guess. Try to get to from that, rather than keeping neutral like we try to do. We'll just chat about it from a bear's perspective. This market is still looking good. We've got 5,600, we've got a few cents, a few points shy of that. We want to see it get up there, up to 56.10 maybe. This is don't forget this is the CFD, so the pricing's slightly different, but that action, you can see that price action is looking quite nice. Still could extend straight up into 56.10. It's just the ASX we want to keep an eye on anyway for now. The Aussie, holding high lows. We can see we've pushed up through that 7,500, did spike through it, rejected that, pulled back, made another high low just on this current leg up, and we took out the highs, made some new highs, but it's not insane what we've spoken about, holding high lows, but it's not super strong, that market at the moment. It's spiked through the highs and it's pulled back, and it's currently pulling back at the moment. It is getting a bit extended and oversold. So it'd be interesting to see whether this high low holds at 74, say 75, or we just sort of bust through that and build a lower high, sort of retesting around that 75 and then roll over from there. But yeah, at the moment it's still, trend, that contraction. You can see it's more contraction than actually trending, contracting higher from that. Remember that big leg down. If we get that back from 77.50 thereabouts. So just keeping it in the context, whether we're just contracting, we are holding some high lows, like I said, but in context of this leg down, remember 1/3 to 2/3. If that's a trend down, 1/3 to 2/3 contraction of that distance, which has taken us. We're about there now, so we could just be rolling over from here, just preparing for a bit of a knock on the head. So I think it's obviously got to do with what's going to happen. I think it's tonight, about 6 a.m. our time, Australian Eastern Daylight Savings Time. About 6 in the morning will be the minutes. Oh well, so the Fed announcement. I think it's at 6:30 when they have the minutes in the press release. So be interesting to see how that goes. Alrighty, now let's get into it. Any questions there, guys? All right, just. Alrighty, just bear with me a sec. All right, let's we'll get onto a daily now of the ASX and just see what it's looking like. And then we'll get into this topic of discussion. Now, 1987 show my age. I was around then, but I don't think I was in the market then. I don't remember what happened in 87. Sure, I got into the markets because of my father, so I'm sure he was around then. Belted around a bit at that time. Where was I? I was probably about year 10, year 9. That's interesting, Paul. Yeah, I've got a good little article, and like I said, you sort of triggered it in my mind. I thought, okay, let's look at it from the other side. Not just, and it is time. It's very prudent, I guess, in your trading and everything. If you can just, sometimes you got to keep yourself from being a raging bull or a raging bear, and that's. I mean, most people have a bit of a tendency to lean to each side. If you can keep yourself as neutral as possible, but always look at both sides of the market. Stand back and just go get a clear view. Try to start from scratch and just see, okay, what's the actual market telling me? If we just take a look at, you can see this is preparing. If we just take a look at quickly this one, you've got that move higher, and if you just take and project that, all right, it's going to take us straight to the same points, 5600, 5610. So if we can actually stand back and say, all right, I'm positioned at the moment. We've got quite a few alerts long, and it is a bit of a struggle of the market. And it's not just we've recognised it, obviously, and I think a lot of people I spoke to have actually recognised it too. It's not a even though it's pushed up and you can see this leg higher, it's not a fun market. It's not an easy market. It's a bit choppy. You're getting some stocks that are going up and they turn around and head south again. Um, and vice versa, you get some that are going down and turn around and bounce and you jump on and then they pull back on you. So it's a bit of a mix. Obviously, it's a mix most of the time, but it's not just everything we're jumping on when a good setup. It's just kicking on. You can get a clean setup at the moment, a great setup, and the market it spikes up on that technical buying or its fundamentals. Then it just runs out of steam. So they run out of steam quick, in my opinion. Apart from that, like we said, Galaxy. Um, but yeah, it's not an easy market at the moment. So you just got to step back when it's happening. Just step back and say, okay, where are we? Where are we on an overall basis? What's happening? And just taking a quick look at the ASX on a technical basis, we'll just drill it back a bit. Probably just take it on the weekly, actually. We've had, the market, it's kicked higher. We've had this, and you can see sort of this move down, and you got that high-low build. It's moved to a really, it's led to a really strong move higher, and it kicked up to 6,000, above 6,000. Once we got up there, you can see we've just touched on it a few times. We've had a strong sell-off all the way back down to, 4,700. We've lifted off there, obviously, lifted off there on a daily basis, but this price action, like I said, you get this top price action. It's not super strong, right? It makes a higher high, higher low, higher high, higher low, but it's all in context of this move down. Generally, you want to see it have a good move up, had a decent enough correction, build a nice strong base to work from. Maybe we're seeing that's the base here at 50.71, or say 50.50, sorry. That's our level. Maybe that's a good support base to be working from, but where we are just at the moment, by looking at the daily, we're getting a bit extended up there as well at this 56. It's the second time around we touched it. The market's starting to look a bit extended. I think it could easily spike through and just wash people in, and the market will probably do that more than likely. It'll pop through that level because that's a key level. Everyone's going to be targeting that maybe. Like I said, the market's extended up there, so it'll probably catch a few shorts, a few early shorts. They might just jump in and go, okay, we're extended, we're going to sell, we'll sell off, pop through, stop them, get them in, and then get them straight, whip them out again. Or you get these, a few more people buying on stop up here and just go, okay, if this continues through here, I want to jump back in the market and load up. For me, I'd be tentative about loading up at this sort of zone. I'd rather load up off a decent enough correction. If it pulls back off here and then builds that major higher low, maybe. That's what I would be looking for. So, in saying that, from a bear's perspective, it could be looking good. Does that make sense to everyone? Just because we're stretched, and it's not just that. There's a few other key factors we'll discuss in a moment of the US and what's happening in the US. And I've got a bit of light reading for everyone. Just have a look at it. I'll put up that Bloomberg article. I'll go through a few key points. If we can scan through it quickly and just whip up a few key points. But yeah, just taking, glancing at the ASX, we've got that. If that's, or if this leg higher and this is a good base, it could take us up quite a bit. That's obvious, but maybe due for a bit of heat to come out of this market. And if heat comes out of the market and it gets a bit overcooked, that's where we could get a big sell-off. And if the catalyst for this market, whether it's just a bit of heat coming off and we build that higher low, that's okay. That's just a natural, function of the market. Or if there's some sort of catalyst that ticks us off, yeah, it'd be interesting to see what happens. So I think if we're looking for catalysts, I think we're going to be looking towards the US, in my opinion. Are they stretched? Are they going to be due for? Is it going to be a correction or a big sell-off? This is all stuff that we don't know, so we really just got to read it and at this time assess what the overall markets are doing. Yeah, that's true. Susan, Germany has been extended and still running. That's true. That's true. So a lot of these markets, you can look at the US. We'll go through. Actually, we'll go across to this article. What I'll do is put in this Bloomberg article. If I can find that link again. We'll go through it. I think this is it here. So this is something come up on Bloomberg. I just read that today. I found it interesting. So if you can go to that, sorry, what am I talking about? It's Reuters, isn't it? It's not Bloomberg at all. I'm onto it this morning, guys. Cooking with gas there, I'd say. All right, so this one here, it's got stock bond markets could see sharp declines. U.S. financial watchdog. Obviously, take everything with a grain of salt. There could be another side of this to this article that we don't know that's come out. And there was something that I put in the morning jumpstart this morning. It's just a couple of figures about the S&P. The S&P 500 is trading at. Let's just get that over here. The S&P 500 is trading near 17.7 times forward 12-month earnings, company earnings. So the valuations, they're looking at those and say, is the market overvalued? Are they projecting too far ahead? So at 17.7 times, it's above the 10-year average, which is 14.7. So just that figure alone has obviously shown that the market's a tad extended, maybe. Is it going to correct? We don't know that, and that's something we don't never jump in and say it's extended, let's sell, because it could just keep going. Just what Susan said about Germany. Germany could really, it gets to sort of overextended, a bit overbought, and then keeps, just keeps banging along, keeps cooking along. So you don't want to just jump in. You've got to have a technical view. And if there's too many things lining up, the way I would attack it and the way we like to attack it is rather than just start exiting, you could tighten up your stops if you've got a few long positions on the boil. Tighten up your stops, even start searching a bit harder for a few shorts, because I mean, if this market tanks, these shorts could really kick in. If it doesn't, if it's more of a correction, they could be a mild short. Like I think we had a few when the market fell over a bit before. We had a few shorts on ASX. They did okay. We made some money off them, but they weren't. And you could see by the way they were reacting, they were getting held up a bit better than what we thought. So the market, turned around and bounced back up again. It's just a good way to attack it. Maybe hedge yourself. It could be, or you just, you know, exit and get a clean slate. The thing is with the exit, obviously, is if it turns around, it's just a bit of a correction, then bang, we pop back up like we did, I think, at the start of 2016. Big sell off and then bang, straight up again. On the back, I think it was oil, wasn't it? Yeah, over 21. Here you go, it was 16. So it's interesting. Just on the back of that, I mean, that's what we're talking about. The Dow and the S&P, are they, the company earnings and company valuations, are they overcooked, or have they got good reason to be overcooked at the moment? Yeah, which basically means you need out of the US, you're going to need inflation and growth. Now, obviously, everyone's banking on, Trump, his, I don't know, I always forget what you call it, his policies and stuff he enacts or he kicks in. Are they going to be conducive to growth? Are they going to create inflation? Are they going to be good for companies, and really kick along the economic numbers, the macroeconomic numbers? And you're going to see the US just kick along, and then maybe the valuations will catch up. Or is it going to be a bit like this year? Going into end of last year, we're talking about the same sort of scenario. Got a rate rise. We're going to get one. Got one, I think it was December, same time last year. Probably looking towards another four. That never came about because those numbers just did not kick off. Is it going to be like that? If that's the case, yeah. So I just read the rest of it there, Paul. The moment Trump disappoints with something, it will be a correction. Exactly. So I mean, if that's the case, then where we are at the moment is that you wouldn't think it's sustainable at all. All right. Not, we're not. I wouldn't try to take either side of the market. Like I said, you just got to look at both sides. What's the reason for it going up? And it's like anything. If you individually look at a stock, is it overstretched? Would you jump in here? Probably not. Okay, if you're in, what would you do? You'd probably just tighten up a bit, tighten up your stops, still let it run. I mean, you never want to cut a position just because you're trying to guess what the market's doing, because you never try to guess. You just try to react to what you see. So obviously, if we, as a macro view in the overall market, we just want to, maybe we get to that point. This market's getting a bit overcooked, like we've just, Paul's spoken about. I just spoken about. Earnings are overcooked. Now, if something doesn't happen with Trump, he does disappoint, then those valuations shouldn't be up there, and you'll get a correction. You'd expect to get a correction anyway, or we get a few more numbers coming out early next year, and this we can see that these valuations are probably going to be a lot better, maybe better than expected, and then they sort of catch up to where the S&P is trading. Does that make sense, guys? So either way, we've got to take a view. You just got to protect yourself, take a view. or not so much take, but be prepared. All right, let's just take a look at what this article popped up. So does everyone had a chance just to quickly scan over it? Um, just quickly, there's a couple of points in here. Stocks and bonds may be riding for a fall as equity prices soar and interest rates stay low. A federal monitor, okay. Warning that such a tumble could inflict serious damage on banks, life insurers, and other important parts of the economy. The official financial research, I mean, official, that's another thing you got a question, I guess. Oh, sorry, the Office of Financial Research, is it official? Found stock valuations measured by comparing prices to earnings have reached the same highs, go away, reached the same high level that hit before the three largest equity market declines in the last century. Um, so that alone, whether that's just a scare tactic, we don't know, but that's okay. If that's the case, should we be worried? Reading along, there's a couple of different things they said. At the same time, commercial real estate prices have climbed while capitalization rates, which measures the property's returns, are close to record lows. Uh, a price shock in one of these markets could threaten financial stability by hurting funds and banks that have leverage to leverage or rely on short-term funding. Okay. In the report, it said that also risks posed by large and interconnected banks, Brexit, computer hacking. I find that interesting. I don't know if I missed something there. I probably have. Anyone know what they're talking about with that with regards to computer hacking? Um, anyway, swaps, clearinghouses, shadow banking, and pressures on life insurance companies. What else does it go on to say? Non-financial firms. I think this is something that they're a bit concerned about. Obviously, non-financial firms like banks. What do they call them? Oh, there's another word. Okay. Non-financial firms went deeper into debt this year to take advantage of low interest rates. A possible wave of defaults by those companies could hurt their lenders. Be interesting to see if they do have, I guess, interest rates and inflation put pressure on the higher interest rates. What's going to happen with these companies? Can they wear that when they buy? I guess their debt levels are quite a bit higher, so they've got a bit more to pay off. Can they wear that, or is that going to affect them? Get a few defaults. That'll be interesting to see how that plays out. Uh, Banks, what do we got? A possible wave of defaults by those companies could hurt their lenders, banks, mutual funds, life insurance, and pensions. Credit to corporations is growing faster than the GDP, the US GDP. That's interesting, and the ratio of the debt to earnings is historically high and rising. So sooner or later, that's got to take a toll, you'd think, wouldn't you? Debt to earnings. I mean, if you can't increase your earnings, then the debt sooner or later has got to take a bit of a toll. Yeah. Raising interest rates. I mean, just to crimp inflation. It's also going to crimp, and it's going to make it a bit tougher if they've got like just this statement here: historically high debt to earnings. If you've got high debt, then that's going to eat away as soon as you start raising rates. If you don't reduce debt, if I've got my 101 economics, I guess, correct. It will be interesting to see. So it's going to be an interesting. I think it's 6:30 tomorrow morning is when you got the meeting minutes, and a lot of this sort of stuff could be answered, or what the Fed Reserve's view on it all is in inflation, or exactly like Paul said, if Trump disappoints, I think we're going to see a bit of a correction. Um, if not, I mean, you obviously, like I said, you can't just factor that in. You can't just rely on that solely, but it's something they're always keeping the wings. Anytime something gets stretched, in my opinion, a stock or the overall market, anything, you really should just be trying to take the other view, like I said, and just be prepared. What are you going to do? Plan ahead. That's the key to anything, I guess. Um, so just here, it's got in the last 3 decades, corrections in corporate debt, equity prices, and commercial real estate prices have often coincided. Uh, Continued low interest rates likely have strengthened the links among these markets. Uh, long, Low long-term interest rates have given businesses incentives to borrow and pushed investors to pay more for higher yielding assets such as equities and commercial real estate. Investors are now vulnerable to heavy losses from even moderate increases in interest rates. So I think obviously a lot of banking on what's going to happen later on. Yeah, I want to know. I'll probably do a bit of research in that too, Susan. Trump and Russia. Um, Oh yeah, I got it because I know there's something there to be interesting. Uh, anyway, I guess there's quite a bit in there. Just continue reading through that if you want. Let's just so maybe you can see through that. Maybe we've got some triggers. Like we've discussed this before. Interest rates. What's it going to do? Maybe that's um, there's a few things that are lining up together fundamentally in the market. Um, let's take a look at the technicals. So we can see ASX daily. We're getting up into that level. Just look at the XJO, see if we get a bit clear. I mean, you can see that it's pretty clear on the XJ. You've got major support down at 50.50, a major resistance zone potentially at 5,600. We haven't confirmed or denied that level just yet. We could easily pop through and just continue on and come pull back, retest it, and go. Um, but just got to keep in mind what's happened in the US, and we're going to find out soon enough anyway. Um, but yeah, we are up that level, and remembering we have stretched up, and we probably extended a bit up into that level from this 50-50 level. We put on what 550 points. That's massive. That's a pretty good little run. Um, so it'll be interesting to see. Let's take a look at. Just flick it over to a few other charts. The S&P. Um, this is what I'm finding interesting. I'm just trying to analyze this in different ways. This is a daily chart also. 56.30 measured. Yeah, I did do that actually. I measured this. You've got. If we can just delete that. We've got this. So this is a leg up. If we can get that. So I think we looked at this yesterday, didn't we? I don't really. I mean, me personally, I don't really like taking the low from way down in 50-50. I mean, say we did purely because it's just got smashed down there a bit more. Not so much technical or anything, just a beating really. What it comes down to. That move there, if we extend that up, that's taking us up towards where we are currently, just that one leg up. But if you take that slightly different, obviously whether it's from here or here, I think that leg's probably very similar. Oh, look at that. So you got that leg from this low, not discounting what got down to 50-50. Project that up. You've got the next leg, which pretty much hits to a T. If we can take that again, like I said, don't be surprised if we do spike through. If this is what's going to play out, another 30 or 40 points pop through and then straight back down again. That's just volatility projections. Don't put as much stock into that as what you could do, but it's just an idea of one move up, a correction lower, another move up. We've had that correction lower back down the 53.83 zone, and then we've had it. We're in the midst of pushing up again, but we're heading up into some strong resistance. So there's a few things coinciding there. The daily's overcooked, or getting overcooked anyway. We're up into a resistance zone. The news that we just spoke about a bit in the US, and we'll go through these other markets too. There's a fair few things sort of lining up. But what it comes down to, is it going to be a correction or just a major topple over? That's yet to be seen, and we're never going to know that until we're in, and then we can only assess it as we go. If that's the case, then if the bears do come screaming out of hibernation and they really start attacking, let's look at this. Is the S&P on a daily? You can see and just take into account this last little move too, has been quite solid. I mean, just even the last few days and week or so, it's just been bang, near vertical. So, like we said many times, is it unsustainable? I mean, you don't know where it's going, but sooner or later, generally, the more vertical and harder it goes, the harder it can fall over. So if we just look at that, you can see that major support zone. We're coming off at 1835 thereabouts. We roll over, sudden shock sell off. That was mid 2015. Pop back up, another sell off down in beginning of this year. At the beginning of this year, retested that zone a couple of times, just spiked through it, a bit of a washout. It's always good to see a bit of a washout when you're in an extended area too. I do like that. If you can just look at this zone in here. Whoop, that's not what I want. Just look at that there. That zone in there coincides to sort of around here. These two, divergence, the way you want to look at it. But it got stretched the first time, retested it, and it wasn't as strong. That moved down. So it's always good to see that, especially in a major support zone. And then we saw the market obviously pop up. Now, if we just take a few of these, to give us an idea of where we're at, I love these volatility extensions, we call it. If you're taking that as one leg up, segment, I'm just going to draw it up again. All right, so we just take that up. So it's pretty much a measured move. Take a bit of a look where we are. If that's it. I mean, this is all subjective, don't forget, guys. The way I look at this, it is subjective. You could take it, you could do it any ways, but if you can do it enough different ways and see that enough things line up, you've got to put a bit of stock into it, I'd say. What am I doing here? Segment. And if we do the same type of thing, even if that's your low there, just this move up rather than the whole thing. If you take this as a bit of a low, because it's had a push up, held support. The trend really didn't change. You can see that, if we can see that just through here, bit of a spike through. That was really a correct correction back down to pretty much the anchor of that move. Just retest it and kept going, and that's where we had that topple over and a break of a few higher lows, a few anchors. So if you're taking this as the start of a leg and you've got this move up here, if we just grab that, project it, like I said, you can project it from there, and we're a bit overcooked if that's the case. But like I said before, I don't like to take it on those sort of flush moves. And again, look where we're sort of heading. There's a few things sort of coinciding there at the moment. Maybe it's in a good zone, and it just happens to marry up with interest rate announcements. So just looking at that S&P, again, you're going to have in the back of your mind, is that getting overcooked there? Is the probability of this move just continuing up without a decent correction, especially considering these last few days? Look at that, just vertical, 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 bang, 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 bang. What was that 1, 2, 3, 4, 5? Bit of a red day there. 6 overnight. So we've had some good sessions higher. Minor pause, back off just in here. Are we going to see just a correction back, maybe to support and then go again? Who knows? But I think there's a few things marrying up, like I said. So it's just something to keep in the back of your mind if you're wholehearted long, like pretty much we are at the moment. Any questions just on that chart there, guys? We'll just click it over. This is quickly the Dow. So the S&P is the broader market, the top 500 stocks, whereas the Dow's, I think, is the 30, the big blues, which they may not be exactly very similar, but all right, let's just go from, taking that leg up. This is probably not quite right because you've got that correction back down to, where is it, 17,100. Let's just take that there, measure that. It is, you can see it's still in the ballpark, but the difference is with this, it's hard to discount. You can't discount this correction either because that's actually a key level. If we just do that, no, I'll leave that. You can see that that's, even if we take it here, that's a big washout, big flush lower on the elections, held up and kicked on. So if you're measuring this move up and then we've had a correction, we've had a minor move, it stalled a bit early by the looks of it. But even if you're just measuring that, you take it from that first one, it's sort of hitting on a level. All right, let's do just a level from here to here. Didn't like me, did it? So if that's a leg up, where is it going to take us? Like I said, so we're starting to look a bit overcooked on the Dow even. There's any ways to measure this, guys, by the way, just but to me, just trying to take a bit of a view and trying to get an idea of what's happening up here. Are we hitting anywhere we can project? Because it's really hard. Obviously, when you hit into new highs, you've got no resistance levels you're going into. You've got to take sort of projections of where you could be heading. And this is, I find this quite comfortable, doing volatility projections of the leg up, try to pick some key levels and not just try to do a few different ways just to see what's more likely or where it could marry up, and just prepare yourself a zone. Even if you're doing it like something like this, we've got that extension, take from the high, maybe it's in that zone, it's getting to the top end of that if that's the zone. But either way you sort of mix it up or look at it, it's getting extended in my view. You can see these last few days, like just bang, 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 straight up, hasn't corrected. Even after going into that big washout over the elections, and then it's just been creeping, not creeping high, but just it's really this type of final price action gets conducive of a bit of a blowout to the top side. So either way you look at it, if you're going to buy long here, I would be concerned. I mean, you could miss the boat if you're not already positioned long on it, say in the US anyway. Um, you'd want to see some sort of correction, even if it's going to build that high low, to take a chance and work out of a base rather than just working in from the highs. And you can see, look at this stochastics. It's been stretched for quite a while. So, and like I said, stochastics don't put too much stock in it. See, that's been overbought since about this level. Went overbought, it's just hanging around, then it's put on 18,900 to what are we now? 99, it's put on 1,000 points. So 1,000 points in the Dow's quite nice, even when it's been in overbought territory. So, but either way, we're getting up there. Any questions there? Anyone's got a view on that? Well, before we click over to the DAX, just a quick glance at the DAX. So we looked at this one yesterday. Either way you chop it up, the markets are getting to that extended territory. So we looked at our market. The S&P is, it's in a zone where it potentially could be extended and due for a correction. Dow, similar. ASX, similar. Germany's one that's probably. I mean, I do like this overall longer term price action. Whether we just correct off there and then go again, you don't know. But yeah, it looks. All right, just want to through in that. Finviz gold futures. How do I get that, Susan? Finviz. I've never heard of Finviz. We can bring up spot gold if that's what you use to chart of spot gold. Okay. Finviz there. Let's do that there. I'm guessing this is it here. So futures, we just want to go. You want to go to gold? Is it? This is quite interesting, actually. Metals gold. Click on that for a chart. Okay, so what's this? This is interesting. Financial visualizations. So you just highlight gold. It's been sold heavily, hasn't it? One day relative performance. Got at a squeeze. Sorry, what do you mean by cut there? Double click. Ah, cut at a squeeze. Okay. So you say it's coming to a bit of a squeeze area down here. All right. Let's actually chart up gold in a second. We'll have a look at that anyway. See what that's looking like. But interesting. We'll keep an eye on that. Nice little website for me. Thanks. Um, what are we looking at in the DAX? Let's just quickly churn over the DAX. We've seen like we said yesterday, this is looking like it's not bad price action. It's come back down to a major zone in that 86.50, 60 area. One leg up, two legs up, and potentially that third leg is going to take us through a key area at 11,420. the way everything is, it could easily spike up into there and then roll over, just because it's a key level. Or this just continues on its merry way and goes higher. Maybe it pushes up above that zone. We find a zone up here where it corrects off and then builds another high low and goes. But that's its third sort of a leg off that major support. If that's the case, we might be, if it's on a longer term basis, we could easily just be rolling over, a major sort of correction from here, pushing up, washing out a few um, long positions, and then bang, away we go. And it is, again, like anything else, it's extended up here, potentially starting to get a bit stretched, a bit extended. So, all right. Is anything that anyone wants to quickly look at? We can have a look at gold, but chuck up some, if there's any charts in particular. I mean, you can see if there's any charts that you think could be getting stretched as well that you want to have a look at. We'll just evaluate stock by stock. Just while I have a quick look at gold chart. We'll get this chart up here. Just go back on a longer term basis. So just clear out some of this, sorry guys. So really what we're seeing is we had that push down, we've pushed back up, and it's not a key level as such. It's more just it's washed out a few of these lower highs, which is nice to see on gold anyway. We've had that 1-2 leg up, maybe correction, and we could easily just build a lower high, sorry, a higher low just in here. On a daily basis, gold's looking a bit stretched to the downside. So, and it could just be working its way back up if we took and like look at the overall market. Yeah, look, we've got a key zone down here. We could be working off that if we just. Yeah, so we pushed up off that, say, 1050 mark. This sort of price action, especially when you, for any bears in gold, this is just my perspective. Any bears in gold, I know generally you're either a bull or you're probably nothing in gold. Everyone loves a bit of gold there, but you can see it's taken out some of these lower highs. You can see, a lower high here, lower high here. It's made a new lower low, then it's just gone bang, washed out that, and that good strong move up off the 1050 zone, and then it's held at 1200, and then pushed up, extended up into like I said, this is not really a key resistance. It's just where it's traded up there before. You've seen this sort of zone at 1425, high low touched up in there. So that's probably the next one where we could find resistance. We did. We found it up here, rolled over, had a bit of a spike, and then just continued lower. But in context of this move higher, it's sort of the first real correction of this major leg. Okay, because it's been a key level was down here at 1200. I mean, that's obviously the numbers are very wide apart. But yeah, we've had one good strong leg up, consolidated, even retested down at 1200, had another good strong leg up. We've contracted back through support. There's no reason why this longer term, obviously we're talking a lot longer term, could just sort of do this action. It may just consolidate around here and then start squeezing a few and do this type of thing. Does that make sense? So it just depends. And again, gold's the opposite view. So if that becomes a safe haven, market tanking it, it's in a good position. We are getting a bit stretched down here. There's nothing to say we can't just keep selling off and all the way down to 1050. That's all fine. But it's just getting a bit the probability of that just going down without some sort of correction. Yeah, the probability is getting a bit lower. All right, guys. Any stocks? Like I said, if you've got a stock that you just want to quickly look at. So yeah, to wrap that up, I guess, are the bears potentially coming out in 2017? Are we just going to see a correction of these markets? If we just go back to the Aussie, so our market, to draw this up, are we going to see a correction? We're going to top up through there and then start building those lower highs for a rollover, but really just correcting this leg. Are we going to see this type of price action and then pop back up and make new highs? or are we, just going to roll over from here? So we've had that just wash out, sharp move down, and say retest that, and then we just go, from there all the way back down to sort of, who knows from there, maybe retesting up to 50, 50, 50. Is that what we're going to see? Is that what we're in for? More of a serious sell-off. Either way, we don't know. All we're trying to assess is what's happening up here. Okay, we can see the markets are stretched pretty much across the board at the moment. We're running into key levels, apart from obviously US is into new highs, but just try to get an idea of where by using projections, where the US is. Yeah, they're getting up a bit. Guaranteed stop loss in stocks. Sorry there, Paul. Now you can get them through the system. A guaranteed stop loss. Who are you trading with? Or what platform are you using to trade? Is it you Trade Direct, or is it a ComSec platform? Wait and see. Because generally you should be able to get guaranteed. You're going to pay for them, obviously. You pay a premium for guaranteed stop loss on anything, but ComSec. That's a good question. I'll, if I was you, I'd just give them a quick call, and you should be able to see. Because also with guaranteed stop losses, you can't put them. There's going to be a minimum distance away from the market where you can put them generally. Okay, Susan, thanks for that. They have guaranteed stop losses. It'd be interesting to see what percentage away. Are they going to be tight enough, to take into account the premium that you're going to have to pay? But yeah, it's definitely something just to assess that and just have a quick look. Oh, really? Is it stocks or CFDs? Be interesting to see that too. Now, let me just quickly have a look at something. Guaranteed stop losses starts with just 0.3% of the underlying. So I just Googled that quickly there, and you've got CFD trading, so that's on CFDs. I don't know if it's going to be on stocks. Right, so you're trading stocks. Trading and guaranteed stop loss pricing models explain the difference between the direct. So they have one on CFDs. It could be another way, Paul. You could just be, it gets a bit harder. You can either hedge your position with some CFDs if you like, if you've got something in particular you want to hedge against. If you've got some big stocks, some big blue chip, you'd generally be able to trade them as a CFD, and then you should be able to short them. But yeah, I would stop losses on stocks. Do you know anything about that, Susan, whether they do have them? So it's still CFDs. It doesn't look like it. It'd be interesting. But yeah, I'll give him a quick yell there, Paul. On stocks, yeah, I don't know a lot about obviously guaranteed stop losses on stocks. I would just probably just give him a quick call again on stocks. I'll tell you what, Paul. I know I've got your email address. And concept that I could try. What I'll do, I've got your email address. I'll take a bit of a look into it. I'll even have a chat with Davin and see if he knows more about because it's got to be on stocks, obviously. I'm sure you probably could. We'll have a look into it. Anyway, we'll keep ticking away here. Actually, what is it? 1:30. What we'll probably do is we'll call it a day there. Maybe if anyone's got a stock that want to have a look at, or if you've got an opinion about where we could be heading, whether we could be in for a bit of a getting knocked on the head, It could all start tomorrow morning for the ASX. It could all start overnight. So FP markets, yeah. No worries. Let's just continue just before we. I know it's a bit delayed. Let's just look at where the market is at the moment. 47. We're hanging up there. We're doing all right. Yeah. All right, guys. It will be interesting. You're right. So it'll be interesting to see what they do. Come 6:30. More not so much that they're going to raise rates. We should have got that factored in, but what they're going to say. And if the market doesn't take it well, we could be seeing something happening. This Christmas rally that we're seeing ending a bit sooner rather than later. But yeah. Anyway, guys, if there's nothing to have a look at, we'll call it quits there. Thanks for joining us. Like I said, if there's anything else you want to have a bit of a chat about that we can go into and discuss, just send it through to support@tradesetup.com.au. And feel free, Paul, to send through an email or even just give us a call and we'll have a chat. Yeah, thanks for joining us, guys, and we'll speak to you tomorrow. Cheers, bye.